Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, in yesterday's trading session, we did see that, in fact, the markets, they came off the high point of the day. The Nifty gave up the 11,000 mark, while the Sensex was down close to around 150 points. The broader markets, they underperformed, with the Nifty Bank giving up the 27,000 odd mark, ending lower with a cut-off around 130 points. The mid-cap correction, though, continued, with the index doubling more than 1%. Ekta, how's trade set up this morning?
Well, like you mentioned, Nigel, I'll start with a recap of yesterday. The markets did give up their gains. The mid-caps underperformed. And in terms of what we saw, in terms of flows, it was the FIIs which net bought around 96 odd crores in the cash market, which was a positive. But the DIIs also net bought around 111 odd crores in the cash market. Now, in terms of, how the markets have done on a year-to-date basis, it'll give you a sense in terms of the dichotomy or the divergence which is really taking place. So the Nifty is up around 4% year to date. Nifty Bank is up around 5%. But the stark underperformance for the mid-cap index continues, which is down 14%. Now, if you look at what's happening within the Nifty also, the gains are very narrow. There are a couple of stocks which are holding up the Nifty in terms of the kind of strength that you're seeing. So, for example, Asian Paints, Bajaj Finserv, Finance, HDFC Twins, TCS, Yes Bank, all of these stocks had fresh 52-week highs, with a couple of others such as Reliance Industries supporting in terms of gains. Now, that results in the kind of dichotomy that we've been pointing out between the mid-caps, the Nifty being at all-time or close to all-time highs, but the kind of narrowness which is only resulting in a couple of stocks which are leading the markets higher. Now, for today, the global markets seem to be steady. So the US markets ended higher yesterday. We have Asia, which is mostly in the green. SGX is also indicating that it is likely to be a positive start, but Brent crude seems to be a little higher than what it was yesterday, but it's still within that range of, say, around $71 to, say, $73 per barrel. So no real big incremental move which has taken place for Brent crude. A lot of results to watch out for: Kotak, Bajaj Finance, Finserv, ABB India, RBL Bank, Sterlite Tech. In terms of a couple of other cues that I'll be watching out for, the mid-cap stocks correcting. So, for example, Ashok Leyland was at a 5-month low yesterday, and the dichotomy with a couple of stocks continuing to gain. So, Bandhan Bank, Berger Paints, HEG, all of these stocks were at fresh highs yesterday. It is also the Bank Nifty options expiry today. Plus, it is the monsoon session which is underway. So, do watch out for cues from there.
Okay, all right, Ekta, but what about some more stocks that we should be looking forward to today?
Well, Mindtree should be in the green today. The company reported a profit of around 158 odd crores. Fortis has clarified that the grounds raised by Daiichi in the application in Delhi High Court are unfounded. So maybe that stock will continue to trade with some amount of uncertainty. Cadila Health seeks shareholder nod for raising up to around 10,000 odd crores. Maybe that's an overhang on the stock considering it's back at around 350. JK Tyres reacting to its numbers, net profit of 64 crores versus a loss year on year. Relcom net loss of around 233 odd crores. A couple of other earning reactions include GHCL, Mahindra CIE, Artson Engineering. And lastly, the cabinet has approved relaxing production sharing contracts of pre-NELP and NELP blocks, and also the sugar stocks would be in focus in today's trade.
Okay, all right. Ekta, thanks so much for that. Well, let's slip into a short break, and up next, relief for cane farmers. Now, in a bid to ease the stress on sugarcane farmers, the government has hiked the guaranteed price at which sugar mills procure sugarcane. The fair price that mills pay to cane farmers was around 255 rupees per quintal. Now that has been hiked by around 20 rupees to 275 rupees per quintal. Last year, the sugar mills paid around 80,000 crore rupees to farmers, and under the new price, the cost of procurement for mills is set to increase by roughly around 3,000 crore rupees. Here is the Consumer Affairs Minister, Ram Vilas Paswan, on the government's decision.
So the cabinet has taken a big decision here, but you said that last जो fiscal है उसमें 80,000 crore already दे चुके हैं, तो इस साल 83,000 crore जो mills देंगे, इसमें ज़्यादा difference क्या है?
नहीं, हर साल तक सबसे बड़ी बात था ना कि जो हम पहले था कि बकाया पैसा बहुत रह जाता था, जब हम लोग आए थे 21,000 करोड़ का था, तो यदि हर साल क्लियर होते जाए तो किसान तो यही चाहता है ना कि हमारा जो प्राइसेस है वो हर साल के हम सब समय पर मिलते जाए।
सर शुगर प्राइसेस पे कोई इम्पैक्ट पड़ेगा?
कोई इम्पैक्ट नहीं पड़ेगा उस पर।
Well, let's also get in some opinion from Abnish Verma, the Director General at ISMA, on the impact of sugarcane FRP hike on farmers.
In the current season, the total FRP payable by us to the farmers was around 84,000 crore. But next year, if we are looking at crushing almost 325 million tons of sugarcane, the total outgo on account of cane price will be 97,000 crore or FRP. Clearly a big increase of 13,000 crore on account of only FRP payable to the farmers. Number one, because of the increase, that small increase that you mentioned on account of FRP. And number two, the big increase on account of the sugarcane crushing. The areas as on 30th June was still more than 18,000 crore. I believe it should be about 18,200 crore. If I compare that with the last two seasons of June 2017 and June 2018, I would say it's almost about 4 times higher. If you ask me about the next season, I'm really very worried because 97,000 crore is on account of production of 350 lakh tons or 35 million tons of sugar. But we will be selling just about 260 lakh tons in the domestic market. So therefore, 90 lakh tons will remain unsold in the whole of 12 months from October to September next season.
Meanwhile, the cabinet has also eased the policies related to hydrocarbon exploration. It has tweaked the pre-1999 oil and gas contracts to unload, in fact, some of the burden of ONGC as well as Oil India when it comes to payment of royalty as well as cess levy. So now instead of 100% royalty, these companies will now have to pay depending upon the equity in that particular project. Well, moving on then, the GST Council is set to meet on the 21st of this month, and CNBC TV18 learns that as many as 17 goods may see rate revisions. Timsi Jaipuria joins us with all those exclusive details.
Well, what we are picking up from sources is the fact that the Fitment Committee has recommended exemption of GST on 7 goods, including items such as sanitary napkins, marble and stone deities, compensation cess to washeries on coal rejects. Remember, currently GST rates on sanitary napkins is at 12%, and similarly a 12% is applicable on marble and stone deities. But when it comes to compensation cess to washeries on coal rejects, it is at about 400 rupees per ton. The Fitment Committee has also recommended rate rationalization for about 10 items. The committee has also left it open for the council for an opinion for a rate cut on certain items such as kolhapuri chappals, footwear with jute material, etc. The committee has also proposed a lot of clarifications on several items with respect to the current applicable rates. Let me run across to certain items where a rate cut is proposed. These are kerosene pressure stoves, bamboo flooring, ice making machines, water coolers, vending machines, refrigeration equipment, industrial ice cream freezers, quota stone, sandstone, etc. Also, fuel cell vehicles, lithium-ion batteries are also in this list. If this goes through, then several industries which will get a push would include electric vehicles, dairy industry, cold storage industry, etc. Similarly, some of the common use items where committee has asked the council to issue a clarification justifying the current rates. This includes drinking water, refined sugar, petroleum gas, plasma products, fortified toned milk and fertilizers, etc. Let's see what finally transpires in the GST Council meeting. Back to you.
Okay, all right. Time to slip into a short break. But on the other side, we'll go full tilt on earnings that are expected. Kotak Mahindra Bank as well as Bajaj Finance, they'll report their Q1 numbers. We'll tell you. Well, on to some earnings that are expected today from the banking space. Kotak Mahindra Bank will report its Q1 numbers. Abhishek's with us with the key expectations. Hey Abhishek, good morning.
Good morning, Nigel. So analysts on street are expecting this to be the best profitable growth quarter for Kotak Mahindra Bank. They are pegging the growth to be the highest in last 5 quarters. So net interest margin above 4.3% will be positive. Last quarter it was at 4.35%. The loan growth over the last 3 quarters has picked up. Last quarter it was at 24.7%. So anything above 20% will be good. Low cost deposit flow should remain strong. the CASA ratio, the low-cost deposit ratio, in the previous quarter was at 50.8%. No worries on asset quality. So gross NPA, which was at 2.2% in the previous quarter, anything below 2.3% will be positive. Our poll suggests an NII growth of close to 19%, while net profit to grow close to 27%. Back to you.
Okay, all right, Abhishek, but you have a busy day. I believe that, in fact, even Bajaj Finance comes out with its set of numbers. What do we expect there?
Well, to begin with, Nigel, asset quality is expected to remain stable. So last quarter, the gross NPA was at 1.48%. Anything below 1.5% will be positive. The AUM growth, the loan growth has been pretty strong for Bajaj Finance. So anything between 35 to 40% will be positive. Rural business should, augur well for them. They have begun showing growth over there. And the growth is phenomenal due to the lower base. Net interest margin could see a slight hiccup due to the fact that cost of funds have risen over the last 6 to 9 months. Our polls suggest an NII growth of close to 30.5%, while net profit to grow at close to 39%.
Okay, all right. Thanks so much for that, Abhishek. Well, Bandhan Bank posted a 47% rise in its Q1 profit. The bank's gross NPAs surged up by close to 121% to around 388 crore rupees at the end of the June quarter, from around 175 crores in the previous quarter. In fact, let's hear out the MD and CEO of Bandhan Bank, what he had to say on the company's earnings.
As a bank, our last 3 to 5 years, the growth of the balance sheet, if you say that at the advanced side, so year-on-year basis, 51% growth was there. And because of the last year, we are very conservatively taking some decision to not to grow that much. And we are streamlining total process system on that and build up the capacity of the peoples. And we are waiting for that. But this year, that is a normal. We are trying to meet up the need of the people's credit need. And I hope that has been helped.
Okay, well, moving on now from the tech space, Mindtree posted what was quite a good set of numbers this time. And Rima joins in to tell us more. Rima.
Yes, very strong growth numbers coming in from Mindtree. So in dollar terms, it's a dollar revenue growth of 6.9% on a quarter-on-quarter basis versus expectations of 3.5%. In constant currency terms, it's a growth of 8.2% that we've seen. And this is multi-quarter high growth numbers for Mindtree. In fact, in dollar terms, growth rate has come at the highest level in the last 16 quarters. And growth was largely volume-led, so the volumes were about 6.6% growth. Margins have declined by 200 basis points to come in at 14.1% at the EBITDA level. And, the key reason is there was an impact of wage hikes, there was a visa cost, only partly offset on account of the rupee depreciation. But the company has been making investments in its people. Deal wins have also been quite strong. So deal wins have crossed $300 million, an increase of 17% on a year-on-year basis. The contribution of digital to Mindtree's portfolio is the highest in the sector at close to about 48%. Digital revenues continue to grow quite strongly, a 12% sequential growth, 35% year-on-year growth. The only thing you would say is that perhaps growth, the oversized, the top client, its contribution has been quite oversized. So the 43% of the incremental contribution to Mindtree's revenues have come in from its top client, which now contributes about 17% to its overall revenues. With respect to the guidance the company has given, they've indicated that Q2 growth rates will not be as good as Q1. But again, Q1 growth rate is at 8% plus, so it's very hard to match that. Margins, however, will expand compared to the prior year. But, I was talking to a few analysts and they indicated that an 8% growth in Q1, even if the company does a 4% growth in Q2, which is half of the growth rate in Q1, and then in Q3 and Q4, which is seasonally weak quarters, the company does a 2% growth. Even then, you're talking about a 20% growth rate for the full year, which of course is looking very solid and the highest in the sector. It's trading at a premium, 22 times forward multiple, that's F520. The stock has seen a huge run up, but the numbers are looking good.
Okay, all right. Thanks so much for that, Rima. Well, overnight we had Alcoa that reported its earnings. I'll just run you through those details. Well, the stock ended more or less flattish, but in aftermarket hours, the stock ended with a cut of around 2.5%. Remember, for the metals pack on the whole, the biggest focus now is on the dollar index, because the strength in dollar index is not good news for base metal prices. So you need to keep an eye out on that front. But let's run you through the numbers first. Well, the numbers were pretty good for the past quarter. The EPS estimates beat the consensus estimates, so that was good. But the problem is that going ahead, they have lowered their guidance. So the EBITDA guidance has been lowered by around 14%. Now they're projecting a number of around 3 to around $3.2 billion. Now earlier they projected a number of around 3.5 to around $3.7 billion. Not just that, remember in April itself, we had the entire sanctions on Rusal that was playing out. And that's what led to a big surge in aluminium prices. It went all the way to around $2,500 per ton. Now, in fact, they've lowered their estimates or their guidance for both aluminium as well as alumina. Now, for aluminium, they lowered their guidance to around $2,100 per ton. And for alumina, they've lowered it to around $465 on a per ton basis. They, however, state that the deficit that's currently existing for aluminium, that will continue for the coming year. So they are projecting a deficit of around 1.1 to around 1.5 million tons. And they're also saying that the global growth for aluminium should be in the range of around 4.2 to around 5.2%. So they're maintaining their guidance in terms of a deficit on aluminium. For alumina, well, they've lowered it a tad bit. In the previous quarter, they had said that maybe alumina's deficit will be around 300,000 to a little more than 1 million tons. Now they're saying that in fact they've reduced that, but they're saying yes, both these two will continue to be in a bit of a deficit. That's aluminium as well as alumina. But the other raw material, bauxite, they're saying that surplus is there in the market, and that's looking quite good. So watch out for a couple of stocks, maybe Hindalco as well as Vedanta. But the correlation between Alcoa as well as Alcoa's numbers and Vedanta and Hindalco has been broken in the past few quarters. Important point is lowering of guidance, but that's expected given that aluminium prices have corrected by nearly around 20% from the recent peak.